I'm going to give a very short presentation, mainly talk about 24 and a preview of 25, a little bit beyond that as well. And I'll also briefly go back over our business model. As always, we ask you to note our investment advisory. So, starting with 2024, certainly the main event for the year was negotiating the NOBV transaction. And project took a couple of years to bring to the point of announcement. We had about an 8.5 month period to get to closing after the announcement. We closed at the beginning of May, a couple of months ahead of schedule, and we're operating now, and I'd say so far so good. Thank you to Shell and NAM and all of our employees that worked so hard on that project for making this happen. Very important event, of course, for the company. We successfully issued a 5-year, 2.5-year non-call set of Canadian notes. It's our first foray into the debt market. And though we didn't end up using it for NOBV consideration, it gives us a great deal of dry powder for other potential transactions. And thank you to National Bank and our creditors for their involvement in this issue. We continued our share buyback program, bringing our cumulative purchases to date to 2.3 million shares at an average cost of $3.74 a share when we include the purchases so far in 2025 on top of the ones that we list here at the end of 24. Very importantly, we strengthened our organization significantly. In our officer group, we added Brian Jong as VP of Finance, Adam Ivaniki as VP of Marketing, Jamie Gagne as General Counsel and Vice President, and Jensen Tan as Chief Operating Officer. All of these officer additions are very important, but even more importantly for us was the joining of forces with the NOBV team in both offshore Netherlands and in the Assen office. Of course, NOBV has now been renamed TEN, or Tenaz Energy Netherlands. Over the long run, our people are going to be the dominant factor in our fortunes, and being with this team makes me confident that we're going to be successful. In Canada, we made a small gas plant acquisition, and we've increased throughput there already by about 2/3 from the original level when we got it. In this transaction, we got some associated leasehold and recognized redevelopment opportunity in 2 separate pools that came with the acquisition, one in the Ellerslie and another in the Glock Formation. That allowed us to start a multilateral drilling program, so multilaterals, horizontals without any fracturing. And it's that unfracked multilateral program that has been the basis for really our entire 24 and 25 organic growth in Canada. We still have substantial inventory in the Rex Formation, also in the Sparky Zone, using fracked horizontals, and there will be some remaining unfracked multilateral drilling. So I think we're in good shape with respect to inventory. Again, having shifted for the time being to the multilaterals. Keep in mind that our reserve book at year-end 24 included only Canada and the old Netherlands non-op assets that we had. We don't record NOBV now 10 within our ownership until closing, so we'll hit the year-end 25 reserve book. But even without including NOBV, we still recorded over a 300% 2P reserve replacement and did that at over a 2x recycle ratio. This is based on an independent report by McDaniel. And of course, we continue to advance our transaction pipeline in our main areas of interest, first of all in Europe and secondarily in Latin America. So that's 24 in review. Let's go back further in time and take a look at the company's record since the recap of Altura in the third quarter of 21. As shown in these various panels, production is up about 13-fold, and let me just explain how the pro forma bars work here for 25. Again, in our guidance numbers. When we're doing our actual production accounting, we only count an acquired asset after closing. And of course, that's May 1 for the NOBV assets, the main piece of the company today. In this plot, pro forma, we are showing how it would have looked had we owned NOBV at the beginning of 25, so as of Jan 1, 25. And with that, production would be up 13-fold on that type of look versus where we were at the time of the Altura recap. On the lower left, it's the same kind of presentation for pro forma FFO, again, counting NOBV as of the beginning of 25. In that case, FFO would be up about 40-fold since the recap. On the upper right, really a pro forma look that includes NOBV in the reserve value at the end of 24. We'd be up about 24-fold. Again, that's full time series is based on independent reports by McDaniel. We did commission NOBV reports at the time we made the acquisition, and we updated at year end, although it doesn't go into the official reserve book, of course, until closing. And then on the lower right, we show the share price performance. We've been very fortunate to have about a 9x increase in share price from the reverse split adjusted $1.80 that we had at the time that we recapped. So we see it as a record of growth and value addition, and we want to thank our employees, our suppliers, and our counterparties for their work with us in making this possible. Next, I'll briefly review our capital structure as of Q1. So at Q1, we had nearly $175 million in cash. That includes restricted cash. We also have an undrawn bank line with NB. When you take into account the long-term notes that we issued and our working capital position, it brings us basically back to balanced in terms of net debt. Very slight negative net debt position, this at the end of Q1 before any of the cash flows come in from NOBV. On the lower left, we have the Canadian high yield note issue that we discussed earlier. On the upper right, just a recording of our share position, basic shares, and also the dilutives that have currently been issued. And on the lower right, we take that reserve value pro forma that we talked about on the previous slide and convert it to a per share number, show the time series since the recap up about 24-fold. Next, let's take a look at 25 forward. So some of this activity, of course, has already occurred. We've already drilled 2.4 net wells, 3 gross in Canada. All 3 of the wells produced oil and gas. I would say 2 of the 3 were very successful. Basically 1.9 net out of the 2.4 very successful wells. That allowed continued organic growth in Canada on not a whole lot of capital investment. And identifying and executing this type of capital efficient reinvestment is an example of what we think Tenaz can bring to the table in other assets, such as NOBV. In Netherlands, a non-operated drilling project is planned for the end of 25. That's the L10 Malachite well that is listed here. We have a 21% working interest. In our operated assets offshore Netherlands, we aspire to begin barge workover activity late in the summer and drilling activity in the fourth quarter of the year. We'll start with some earlier well work activities, primarily using our walk-to-work vessel. And overall, the capital program that we have intended, 55 to 61 million Canadian dollars for the period in May through December, will be about 3/4 well work and 1/4 facility projects. Over the long term, what we address in the bottom part of this slide, really only about Dutch North Sea reinvestments that are available. We've got a whole range of projects. We've got a number of facility projects, mainly compression, but other vessel and piping redesign that we think will allow us to produce at higher rates and pull these fields down to lower abandonment pressures. We'll be continuing the workover program, as I mentioned earlier. It's really going to be a more or less a continuous multi-year program using the vessel and the barge as we discussed, and continuing the very high quality asset integrity work that NAM had already done. We'll have a tie-in of to date unproduced discoveries. One example of that is the J9 well, and that will in turn, we believe, with the existing pipelines that'll be established, allow follow-up drilling and some other prospects and pools that we have. And we will have a drilling program, again, as I mentioned earlier, from existing platforms using existing well slots, and hope to start this late in the year. I would see us running a continuous program after that would probably span all of 26 and into the future on an intermittent basis over, we hope, a long number of years, continuing the development of the Netherlands offshore. And the final style of project that we have listed includes greenfield exploration, such as on the large exploration BEF block that we have shown on the northern part of this map sheet. Some of this, assuming we make discoveries, would require new platforms. So those are longer term projects, but it's just a part of the whole range of projects that we have available that we think can lead to organic growth at the same time that we're generating free cash for a long period of time. In addition to this, we, of course, have the Canadian assets to invest in the Rex, the Sparky, remaining multilateral development in the Ellerslie, and that'll be a smaller part of our capital reinvestment program, but again, contributing to organic growth in the company. At the same time, we throw off free cash and utilize a portion of that in our buyback program. To speak very briefly to the M&A strategy, it's really the same as we have talked about previously. There's a great deal of international opportunity. We feel that NOBV is an example of the great opportunities, and we're very fortunate to have that transaction. And certainly we had a very honorable counterparty and a very strong workforce at NOBV that made that possible. The advantages internationally, we see really being a twofold or two-step process. We think that there are lower multiples due to lower competition than in the North American market than at the time that we make the original investment. And then the second phase of that is really more opportunity to increase production and reduce unit costs in the operation phase. And we intend to have NOBV be an example of that as well. The geographies that we're targeting remain mainly Europe and Latin America. We've got some other possibilities, we think, in Middle East, North Africa, and optionality for Canada. So it's a broad geographic funnel and a model that we think can bring significant value add in the future to Tenaz. So with that, let me finish by again thanking our shareholders for their support and their confidence in us. We know your capital is hard-earned, and we're honored that you've taken a risk with us. We thank our honorable suppliers, counterparties, and regulators in Netherlands and Canada. It takes a team effort to execute and be successful in oil and gas. It certainly is not solely due to what we do at Tenaz. And finally, I thank our board for the guidance that they have given us, our employees for all their hard work and energy. I know that successful companies are built on the sweat and the guts of their employees, and I'm very lucky to work with this group of people. And as shareholders, all of our employees and board members are aligned with the rest of our shareholder base. So thank you again, and goodbye.